Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 29th of December, last day of the year, and I hope it was a good year for you. For the markets, the S&P was up 24%, 54% for the NASDAQ, led by the semiconductors. As we know, the semiconductors lead the NASDAQ leads the S&P, etc. The Russell 2000 was the laggard, up 15%, but still respectable, mainly coming in with that basically 12% return here in the last month to make it up for the year. I think the most impressive column here is not only the year-to-date numbers, but the percentage off of the highs. We're closing right near the highs. The Dow just 22 basis points off the highs, and off the lows, the NASDAQ is, we pretty much started the year at the low. We're 73% off the low for the year. So incredible returns, just a little bit of profit taking here today. And I have no special themes for next year. My themes are always the same as a swing trader. That is, I want to look for the low risk, high probability trade setups and manage risk obsessively. I don't want to buy dips. I want to buy strength after the dip. For the people who were buying these pullbacks in here, they had to spend a lot of time underwater. They had terrible cost bases versus when we started to recover. And I gladly missed out on the first part of this rally because I made up for it over in here in this part. You don't have to catch the bottom. You don't have to catch the turning points. There's always plenty of opportunity in the market if you look hard enough, and that's what I do every single day for subscribers to alphatrends.net. Let's take a look at the weekly chart on all these markets. And of course, again, it was a volatile year. We had, this was a pretty large pullback in here. We had these three drives lower, which turned into quite a large drawdown. But again, we finished right near the highs of the year, almost came into the all-time high for the S&P 500. That's at 479.80, I believe is the number, 479.98. So very close to the all-time highs for the S&P 500. And in the intermediate term, the buyers are still in control. We're extended, obviously. And what changes on Tuesday when we start trading again? Just the date. That's it. Nothing else changes. But it might mean that some institutions start to take some profits, raise some cash so that they can position themselves better if we get a sharper pullback. If you look at the anchored volume weighted average price from this low in October, that's down at about 450. And that is basically what one might consider fair value from that low. That's also where we right now have the 50-day moving average coming up. So I think you've got to still just look at this market and say the buyers are in control. We're above a rising 10, 20, 50, 100, 200-day moving average, and that means the buyers remain in control. And it was a transition over in here from the sellers being in control to the buyers taking control. We tested that prior band of resistance on the weekly time frame. That's where our low was found, and that's where we saw this rally. So if we're to see something like this, and I don't think the first couple of weeks of the year, but if we see something like this, that would be preferred for this market rather than just continue to run away. I'd love to see it pull back something like that, maybe in January, maybe in February, and then see the market set up again for some low risk purchases. Buying for longer term up in here seems like you're chasing to me. But again, make the time frame your own. I'm a swing trader, so my focus is mainly on the daily and the 30-minute time frame, 30 minutes per candle here. The 5-day moving average represents to me the best indication of the intermediate term trend. Next week, we'll start out looking at 472 to 471.5 as our first important level of potential support if we continue to pull back. Below that, we have the anchored volume weighted average price from this move right in here, and that and this little band of support as well that we've previously seen. We'll see if we pull back, if that becomes a level of support on a pullback. But the bottom line is the buyers are in control. We get a little bit of profit taking, and on this move here, we've seen several, a handful of sharp pullbacks, But the buyers rushed in every single time, and they rushed in and took these markets to new highs for this rally here. For the NASDAQ, we finished just off the all-time high. That one we had made it past this week. So here was actually last week and continued to this week. That prior high was 408.71, and I think what I would just shown you was where you closed 22 basis points off that all-time high. So buyers are in control. We're extended. A lot of times we see that a market will break to a new high. During an extended market, that is, will break to a new high and then begin to pull back. I'd love to see it do that and then create a higher low that would be similar to this higher low on the weekly time frame. So manage risk, take each stock on its own merits. Don't buy dips, buy strength after the dips. That's the most important thing you can do. Don't sell short stocks and uptrends because you think they're up too much. Don't buy stocks and downtrends because you think they're down too much. They will give you plenty of opportunity to take advantage at some point in the future. Let's look at that weekly chart of the Russell 2000. We've been stuck for the last year and a half in this range, basically. We're at the top end of that range. We broke above it. Now what we'd really like to see after I was told this was a record. I didn't bother to check, and that's why I qualify it that way, because unless you check it yourself, a lot of times don't believe it. But we had seen this market go from a 52-week low to a 52-week high in a record period of time. Does that mean the buyers have regained control and it's up and away from here? It could be, but again, when we see a rally that strong like that, ideally we'd like to see some kind of backing and filling pullback some point, and then be a buyer over here, as that point is where after a pullback we want to buy as the buyers regain control, and then we have a logical place for our stop as well. If you buy here thinking that's the low, maybe you're going to puke your position out right at that low rather than buying right over here with certainty. So that's what we want to look at. We'll keep an eye on the anchored volume weighted average price from these lows, and you can see that's right at this point right in here. And let's assume it continues to rally at that same rate of speed. Maybe in 3, 4, 6 weeks, we'll see a test of that anchor. That would be a very good thing, I think, for the Russell 2000. Semiconductors on a weekly basis, they closed at an all-time high. You can see that's the highest they have ever closed. And we saw a little bit of a pullback in here today. I mean, 0.5 percentage point. We still have a rising 5-day moving average. We held this prior band of resistance. We held the anchor from this gap right here. So this will be an important level, 173.5 for the first week of the year and holiday shortened week. Let's say we start to pull back. Is that a reason to panic? I don't think so. Not from an all-time high here. So the buyers remain in control. It's innocent until proven guilty. It doesn't mean it can't reverse, but there's no evidence that it's about to reverse or that it's undergoing major distribution that's ready for a decline. Just know where your stops are. Manage risk obsessively. The biotechs are, as we thought, maybe going to make it up and test these prior peaks. We did that yesterday, and today we pulled back just a little bit. We still have a rising 5-day moving average. We still have a strong trend higher. I would not fade this. I would not buy it here either. I would prefer we see, same thing I sketched out in the other markets. Wait for a pullback to ensue, maybe some profit taking the first few days of the year, and just don't be in a hurry ever to do anything in the market. The markets don't really, they may not wait for you, and you might miss a certain trade here and there, but there's always more opportunities if you know what you're looking for. Financial stocks had a great year as well. Let's look at that weekly time frame. I guess you can't say great, but they had a very good year. Here's where we started the year, right here. That's the first week of the year. So from 35 to 37, not a huge percentage move, but it was constructive. We made it beyond this level right here, which was prior support, had been acting as a resistance. We looked at it over here and said, hey, let's be careful because this is a potential level where supply might be released. that would be strong enough to hold as resistance and pull back like this. It didn't do it. We only know support and resistance after the fact. What we'd like to see now is a pull back into this area and see this level hold as support. Maybe it undercuts it a little bit, stabilizes a little bit, and then starts to go for the next drive higher. Those are the types of things you want to look for. Understand market structure. Understand how the average price from a certain point tells us with 100% certainty where the buyers or sellers are in control. That, of course, is the anchored VWAP, which if you purchased my book this year, I really appreciate it. It was a great success, and I appreciate all the positive reviews left on Amazon. If you left a negative review, well, then maybe you just weren't smart enough to understand it, is the way I look at it. Anyways, the bonds, they were down for the year, not much. Were they actually down for the year? Let's check that out. I put that away. Anyways, they were pretty much unchanged. If you look at where we closed 2022 right in here, we were down ever so slightly. And it was only because obviously the last quarter when we had this big rally, and in particular the last 6-8 weeks. But the bonds are still, they're in this area where they might find some supply. We've rallied pretty far into an area of prior support, which may act as resistance. If that's the case, I would hope that maybe it does this and starts to do, then continue to move higher. If that's the trajectory for bonds, that's the way I would like to see it ensue. Energy names, basically flat for the year, meaning pretty much a waste of time, really, or the way I look at it. If you look at oil, I saw that the SPR, they finally bought some, I think I saw this week they bought 3 million barrels for the Strategic Petroleum Reserve after Biden kind of drained that. So hopefully they make some good purchases in there with our tax dollars. But we're still in a downtrend near term, stabilizing in this area where we thought we might find some support. So I'm kind of neutral in terms of oil. Gold is looking good to me. We've mentioned that one, I think, last week. If we look at the weekly time frame, we're holding above this prior resistance band in here. And when we click down to the daily time frame, then you can see here that the anchor off of this low, I had marked this, this is, I think 1980 basically will be an important level for gold to hold. If it breaks below that, then we might see that this is a failure. But right now, I'm not really seeing any evidence that that's about to happen. Ethereum, I've been talking about, and I'm still long. We're still having trouble with the anchor from the 2021 high. And we're starting to just see a little bit of maybe distribution in here. I'm not concerned about it. It still looks like it's got a constructive pattern to it. If you're interested in really learning about the markets this year and doing something different, take a look at alphatrends.net. Every single day I do this, the market analysis for subscribers, and I provide actionable ideas every day in an educational format. I appreciate everyone who is taking the time to make comments, listen to my analysis, give me feedback, etc. in 2023. I hope that next year is a great year for you and you meet all your goals. Thanks for tuning in. Talk to you next year.